Hey guys, Casey here. Welcome to Lion's Den Investments and Reviews. In today's video, I'm just going to make it pretty quick and short. Not a whole lot going on in the markets right now. And quite honestly, I don't want to bore you with technical indicators and, you know, all the nonsense and FUD that's going out there in the news. So I'm just going to basically talk about the what's coming here in October because a lot of people are getting impatient. They want to know what's going on with the markets. So we're gonna just cover that and dive right in here. Right now, look for October. Okay, the month of October is gonna be big, and the reason why here is because Janet Yellen has warned of possible October default on the U.S. debt, swollen by the pandemic, of course. And like I've been telling a lot of my friends and people I have conversations with, uh, this what's taking place here over the past 2 years. I can't really say the word here, for fear of being censored. But um, over the past 2 years, they've used this event to check off every single thing that you could possibly imagine when it comes to tracking data, moving us over into a new digital fiat system that's going to be running on blockchain systems, and the list goes on, of course. But you know, October is going to be a big month. Okay, the month of September is normally a red month in blockchain. So if we go down in prices, like I've been telling you to expect, have a long-term perspective on this. Okay, because here in October, one or two things are going to happen. Janet Yellen is going to, well, it's not really Janet Yellen. It'll be Congress, bickering back and forth, of course, like they normally do. But they'll either default on the U.S. debt, which would, send stocks crashing down, basically an economic collapse. The financial system would fall apart right in front of your face. People would lose a lot of faith and confidence. And we're going to talk about that here in a minute with confidence, because it ties into the crypto market. But they would lose faith and confidence in the U.S. system, and of course that would be detrimental to our economy. Now, it's either that or they're going to raise the debt ceiling and they will just continue to print more money as they normally do. But we are at a breaking point here. We're at a tipping point. So if they print up more money, expect higher inflation, okay? Which is going to eat away at the purchasing power in your back pocket when it comes to the US dollar. Again, good for cryptos either way. So that's why I'm saying get ready for October. October is going to be a big month for the crypto market just because of this alone. Not to mention, if we go over here, this is the usdebtclock.org. So if you ever want to see the real time for US debt and everything in real time, from the largest budget items to unfunded debt interest to ratios when it comes to like silver and gold, money creation, that sort of thing. Just go over here. As you can see right now, the U.S. national debt is at 28,760,000,000,000 and 882,000,000 and counting. Right. If we go down here, money creation, you can see right now the money creation. You've got U.S. Treasury dollars. So you got 785 million 600. Oh, I'm sorry, 785 billion. 666,667,000 U.S. Treasury dollars as of right now. You got U.S. money, the M2 money supply. Look at that, 20 trillion, 852 billion. Currency and credit derivatives. Guys, if you ever want to know about derivatives and decentralized finance and all the money that's coming into that market, here it is right here. $598 trillion in credit derivatives and currency. Okay. This is part of what, by the way, caused the financial crisis in 2008 and froze up liquidity. And as you know now, after Bitcoin gave birth to this entire market, you had decentralized finance built off of Ethereum, and that is providing liquidity for the credit and derivatives market so that it doesn't basically crash the financial system like it did back in 2008. But a lot of people are like, how much money is out there in derivatives? Well, there it is for you. But all this, guys, brings me to the next piece, which is, people are asking, well, when is this market going to top off, right? Obviously, I think this bull market is being extended, and it's being extended on purpose, simply because, again, we're starting to face some serious issues with the financial system that's in place right now. And I don't think, just my own personal opinion here, completely speculative on my behalf, but so take it for what it's worth. But I don't think they are ready yet to move us over into this new financial system 100%. So they're trying to push the can down the road, kick the can down the road a little bit further before they get us, fully transitioned. And they don't want this to play out and be a painful process for everybody. They want it to go as smoothly as possible because, if it falls apart in front of their face like this and people lose confidence in the system, they're going to turn away from banks, and you will have a decentralized financial system. They're trying to maintain control of that, and the only way to maintain control over it is to take it in baby steps and roll it out, under your nose, while everything else is complete chaos, right? So you don't pay attention to this sort of stuff. And then by the time it's all said and done, you have this wealth transfer that already took place, and the powers that be are pretty much the only ones that are rich, leaving a wealth gap between the rich and the poor, and completely, decimating the middle class. That's what they would like. All right. I don't know if it's gonna play out the way they want it to or not, but you know, back to the market and how long that could play out. The reason why I'm saying it could play out a little bit longer and be extended here is because of that, that very concept that I'm telling you about here with them kicking the can down the road. So there's a lot of people saying that the market may top off now sometime in November to anywhere between November and January. I was giving it a 4-month time frame. Then you have people out there like Willy Woo, who is an expert on-chain analysis, and he's even got charts that are pushing the blow off top into March of 2022. So if you take that into consideration and align it with what I'm telling you here, there is the potential that it could play out a little bit longer in January. But the best way to watch this is don't pay attention to the noise. Okay, don't pay attention to all the FUD and everything that's coming out from the SEC and the regulations on cryptos and stuff like that. Because of course, guys, everybody knows that they're going to regulate this market. That's not a big secret. And of course, you're going to have to pay taxes on all this stuff. So, don't really pay attention to it. I mean, you can follow it, but don't be in fear of it, right? That's why I always say on my channel, fear nothing, right? Just know what to expect. And that's fine. So don't pay attention to the noise. What I like to pay attention to, though, is stuff like this. So if we go over here to my site, okay, academyofcrypto.com, I'll leave a link in the description below. You can go over to my website here, and down here, just click on Fear and Greed Index, right? So if you click on this, it's going to take you over here. And this is a live chart on the Fear and Greed Index. Look at this. The fear right now is at 30. Okay, now, what's interesting about this Fear and Greed Index, normally when you've got fear, it's a great time to buy, okay? When there's blood on the streets, you buy. When this thing is pegged down here to like 86, 90, 95, you might want to think about licking your ice cream. Go ahead and liquidate a little bit. It's not 100% accurate, and here's why. Because right now, if you look at it, it's at 30. Well, look at Bitcoin over here. All right. We're at $46,000, almost $47,000. And they're saying over here on the Fear and Greed Index that people, go back here. People are saying that, we got fear in the markets. Well, if we have fear in the markets, normally the markets are turning over, but we're not turning over. Okay, which tells me you need to look at other stuff because this is not 100% accurate, but it'll help you when it comes to thinking about, hey, is it a good time to buy? Well, according to this chart, yeah, it would be a good time to buy, and here's another reason why. This is called the CBBI indicator. What this does, it's an index and an indicator based on a portfolio of metrics. All right, so what it does is it takes all these different metrics for Bitcoin over its entire wealth cycle since 2011, and it basically runs an algorithm and combines all of them together. So what you get is the golden ratio, Bitcoin search term on Google. You know how many people are searching cryptos, because as we go into a bull market and the confidence builds, you get a lot more people searching on the Google search engine. Having the peak days, pi cycle top indicator, 2-year moving average, Bitcoin, trend lines, Rupal and Nupal chart, which is another good one. You know, so there's a few others in here as well. But if you go down here to the chart, okay, you'll notice the blue. The blue is the confidence. All right, so that blue chart right there is the CBBI confidence in Bitcoin. You know, again, it goes along with the Google search terms that I was just telling you about. And then here's the Bitcoin price, of course. And then here's the halving events for the protocol for Bitcoin, and the supply shrinking over time. So what's interesting about it, though, is if we go back and you get all three on the chart here, if you look at every time we've peaked out, right? So the confidence, when it hits 100, look at the price of Bitcoin. We were at 1,012 on the chart. Now, if we go down here to the confidence when it was down here at, say, 6, look at the price of Bitcoin. It was $2.14. Same back here. Confidence at 52. Bitcoin price was at $70.26. Okay, that was July 8th, 2013. Again, confidence peaked out at 100. December 4th, 2013. The price went up to 1,090. Then we came back down. We started losing confidence when we bottomed out at a confidence of 4. The Bitcoin price was at $222. Now, if you look at the halving events, though, you had a halving back here, all right, 2013. After we passed over the halving there, you know, confidence started building, and we went up in price. Same over here. When we had our halving, we, you know, gradually just started moving up in price, and we crossed over the Bitcoin price and confidence. Here we are over here, May 15th of 2020, at the halving event. The price is going up. Now, if you go to where we are right now, okay, the CBI confidence is at 57. The Bitcoin price is at 46,215. We have yet to see the confidence cross over the price of Bitcoin. So this blue line still has not crossed over like it has during the last couple bull cycles where we topped out, you know, and had those blow off tops. So if you were to ask me, have we had a blow off top yet in Bitcoin, I would say no. And just to prove it, you know, you go back up here, we're at a score of 56. So we have a long ways to run before we hit CBI confidence of 100. So, you know, take it for what it's worth. It's never been wrong. It's 100% accurate. This chart is right here in this indicator. I'll leave a link in the description so you can go, you know, track this over time. It moves at a snail's pace, so it's really, really slow, but it'll definitely help you not get distracted with all the noise that's out there. You know, news like, for instance, like Litecoin. You know, they were just in the news the other day. Charlie Lee was on Bloomberg, and they were talking to him about the FUD news that came out on Walmart partnering with Litecoin. Of course, that was not true. So they had him out there on the news, but it's a distraction, right? So it's stuff like that. Don't pay attention to it because you get distracted with it, and especially when we start climbing up in prices here. A lot of people are going to have a hard time determining when to sell and when to get out, and you don't want to get priced out. You don't want to sell too soon, like I've always told you. So this is a great indicator to follow to help you make a better judgment as to, okay, how much do I want to liquidate? Do I want to liquidate like 40% because we're at a confidence of, say, like 85? That would be that's pretty much what I'm going to do as far as a strategy, is just use like the fear and greed index, the CBBI. I was following the stock to flow model there for a little bit, but I'm starting to wonder if this stock to flow model is kind of out of date. So I'm not following that as closely. I'm just using these two indicators for the most part. And that helps me basically just kind of, change the channel and get rid of all the noise that's out there right now. Helps me kind of focus on having a better long-term investment strategy when it comes to, liquidating and taking profits over time. So that's all I've got really for today's video. Stay tuned here because I'll be shooting another video soon, and we'll go into some of the fundamentals with what's taken place and some of the stories that have happened over the last couple days, because there's a lot going on in this market, and like I said, it's almost a full-time job trying to keep up with it. So just bear with me as we move forward here going into October, and regardless of what prices do, they're going to go up and down short term. Just when in doubt, zoom out, take a look at some of these indicators for yourself, and grow that main out. Okay, be a lion, guys. You don't want to be a sheep in this market. Okay. With that said, you guys have a great night, and I will talk to you guys here soon.